Hello and welcome to a video giving a message about allocation changes that is required in the current market. All of you would have known the media in messages that our GDP has dropped to 5.4 where the expectation was 6.5. Was it a surprise? Absolutely not. This was actually expected to happen for a very long time. It just took a longer period to come out. Government has come out and told that reason for this slowdown is mining activities have come down, urban consumption has slowed, government spending has dropped. Obviously, government spending in an election year will be down, so that is again a known factor. So this did it bring a drop in the market? Prior to the numbers have come itself, market has dropped. So it is time for asset allocation that is moving away from some of the schemes or investments where we have made extreme profits to some places where there is opportunity. Stay out for some time and look for opportunity to build up and get in there. So when I told it it was not a surprise. We were expecting for this correction from December 23 onwards. By March, there were shoots that government itself was coming and telling, finance ministry was talking about it, RBI was talking about it, exchanges were giving information that market is overheated. But only on the day that messages would come, market went down and again it went up. So liquidity was very high. People were buying stocks like nobody's business and took the prices to a serious high. June results came out which started showing some signs of weakness. Results were slightly down. By August, market gets to know that results are not growing, at least it's become stagnant. September results, which came in probably second week of October, continued that slide. If we take the Nifty profits, which was around 2,14,000 crores, has now dropped to 1,94,000 crores. Will this go down? Probably yes, because the overall slowdown is there. What are the segments that are doing bad now? Automobiles. Reason for automobiles going down is one side inventory buildup has been huge that got dumped into dealers and dealers started complaining on payments and they had to take it back. Slowly it showed up in the balance sheet. Probably people are not buying more vehicles now. Next is consumption. Urban consumption has come down. All the FMCG companies like Nestle, Britannia, Hindustan Lever have reported that urban people are not buying food or goods for consumption. Rural is taking over that gap which is formed here in urban. We will talk about this consumption drop. In my opinion, I don't know whether I am right, but a thought on that. So consumption has come down, FMCG businesses dropped significantly. Then other businesses, banks, PSU banks, they had a very big profit growth in the last 2 years' time. Obviously, when we have a top, from there to sustain the top is going to be higher difficulty. Subsequent results which came kind of slowed down, and that's where some pockets are created. If these are the businesses that's not doing well, oil is another segment which is not doing well. Again, oil, reason was crude oil prices went up in the global market because of the geopolitical tensions, while in India oil prices have not been increased. That is again a political reason. These are all mostly government owned companies. Obviously it will not impact much, but these were the businesses which contributed heavily to the government in exchequer. Like when RBI gave 2 lakh crores to the government, that was from the profits from all these companies. The businesses which are going well now are pharma. Looks like people are consuming more pharma medicines. Obviously that is not. That's because of Biosecular Act which was passed in US, where they said they will not buy pharma molecules from China anymore. The period they have given is till by 2030 they will stop buying from China. The next immediate market was India, and that is where all the pharma stocks have started going up. Then metals. Though government has said mining activities have come down, we see in the balance sheet metals businesses are doing very good. Private banks are doing again very good. Real estate is done extremely well. So when we say urban consumption is not there, people are not consuming food, but they are going and buying real estate. Probably that is what is the numbers are showing. Nearly 70 to 80% higher profits reported by real estate companies, while FMCG consumption businesses have dropped from somewhere around 10 to minus 1%. So ideally that is not, this message is, it's not that money is not there in the market, only that it is getting channeled to some other places. So pharma is one which is doing well, real estate is doing well, metals is doing well, and technology businesses, compared to the fall that the other automobiles or industrial manufacturing is having, the fall here in technology is not so great. Their growth is somewhere around 2.5%. So that is where pharma, technology, metals, private banks all are doing well. So what changes we have to do now? Most of the mutual fund portfolios were having more industrials, more automobiles, more consumption related exposure in their holdings. That has started taking a hit now. That doesn't mean they are doing bad, that their strategy. So now we have to identify schemes which are loaded on the segments which are weak and move away to those schemes which are having segments that are strong at the present in the current market. So moving away from schemes that are having more automobiles, more industrials, more PSU banks, to schemes that have more of pharma, more of technology kind of stocks. This is what is the need of the hour now. Also, from the peak what we had in September, for the market to come to a level where it is in a good valuation is around 13.5%. We were expecting a correction of 13.5%. What has happened now so far is 6.5%. So balance 6.5 may not happen in a hurry, and will not also happen to the extent of the same 6.5. It will stay somewhere around 4.5%, but that will take a long time. So in this period, it is good to move away some profits from schemes that we have generated already huge returns to schemes that are likely to generate more returns. Also taking out money from top schemes and waiting aside to look for the opportunity, because this correction is likely. Maybe a couple of months down the line, the bottom will get from the bottom. What is likely to go up next is those schemes which have this pharma, technology, metals businesses, private banks. So it's good to align to that. Not all the schemes have this kind of problems. So we will send a mail and message to those who are having schemes that have more weightage to automobiles, industrials, PSU banks, oil businesses. When the mail comes, please respond to us. If you are showing your willingness, we will move this money from those schemes, book profit, and move to other schemes where we are finding opportunity. So this change is the fifth time we are doing. We started the correction changes in December 23. Very few people participated in that. From that time we moved from small cap to large cap. By March we started moving money from equity to debt. So what's happened to those changes? The debt portion what we took is generated around 6% returns now, while the market has corrected 6%. You can see the net advantage of holding debt now. Again, we put one more video in August giving one more message that moving to debt is good. For those who all moved to debt and did all these corrections, we have arrested the fall to some extent. Next, as the correction goes down or maybe it gets stagnated, because of holding debt, these portfolios where debt is there, that will start showing slight resilience and start going up. So for all the clients who are having exposure to schemes that show weakness now, we will send a mail as well as a message. It's again a widespread portfolio where the changes have to be done. As we keep reading the schemes where weaknesses are found, we will send messages. It can be repeated messages that's coming. Like today, if we send for 2 schemes, after 2 days we find one more scheme that is getting more weak, we might be sending again. What we will do is we will take out 10 or 15% or up to 20% of the money that is invested into the current schemes and move to a place where that is secure and has potential to growth. Here it will attract taxation also. We will take care of the taxation while we are moving out to other schemes. So tax money, for those we have booking profits, we will keep it in liquid fund and move that money to your bank account for paying advance taxes by March, because we are already in 1st of December now. By the time we complete these transactions, it might take a couple of days. So need not be good to pay advance tax in December. We will pay the taxes in March. So we will send messages, mail to all those clients who are having portfolios where the changes are need to be done. After getting message from you as a confirmation, we will start processing, do the calculations and do the transactions. Let's go through the journey in a safe manner be aligned to the right portfolios and grow our wealth. Thank you.